All right, here we are, webinar number 5. Again, it doesn't make a whole heck of a bit of difference in the future when you watch these. There are 4 other ones. You have to watch them all to make sense, but it might help. They're all on the YouTube channel. Edge Trading Group. Search it on YouTube. You'll find it. But let's get going with a new quote I put on this first page. Trading is like shooting fish in a barrel, and sometimes you're the fish. You've heard me say that before. I said that to the owner of our prop firm back in 2000 or 2001, and he started using it. He liked it so much. The other one is you want the fish or the fishing pole. You know, that adage of you give a man a fish or teach him to fish and everything. A lot of people that come into this business want the fish. I don't blame you. Not you guys, but most get into it wanting the fish. Hey, listen, at some point early on, so did I, but you come to realize that whoever gives you the fish, they get hit by a bus, you're in trouble. So I don't want to take for granted or assume everybody knows who I am, but there's a quick bio about me. CME clerk in the mid-90s, became a board of trade member and trader, and then was about ready to quit the business, got hired by one of the bigger prop firms in Chicago, in the Chicago area, International Trading Group. And then I created this Edge Trading Group website community of guys that, come together, collaborate, and it's gotten bigger and better with, again, the common denominator of people who seem to cling to this are real successful guys from a past life. And they understand that they understand what it takes. And one of the things that people come to me, because I ask, and they'll say, because you were different from all the other stuff that I've seen on YouTube or read about and everything else like that. So different in a good way. You're probably sick of this picture if you've seen me for the last 4 sessions. That's me. Standing on my toes, so I appear to be the tallest. My father, what did he say to us? If you know how, you'll have a job. If you know why, you'll be the boss. So what's the why today? Well, the first one we talked about, a couple things you must look for on a chart. Check. Order flow in real time. Stop hunting to see where other people are stuck. Check. Learn what nobody else is teaching. Correlations and relationships between other markets. Check. Trade review. We did a little bit of that last night. Check. And then today, pulling it all together, and you get a check. Now, that doesn't mean all these checks, all of a sudden you watch these 5 webinars and you're off to the races. You're going to start making money tomorrow. But it will give you a sense of, hey, am I good at these things? So certainly by this time next year, are you better at these 5? If you're not better at these 5 things, you're not going to have the results that you want. You got to get good at all these things as far as the progression of getting good and staying good. There's a difference between getting successful and staying successful. So this is an important checklist. That's why I'm doing it to start the year. And people get a good sense. So watch all 5 of these again. They're all up on the YouTube channel. I also got another quote to start today's webinar. Trade what you see, not what you think. Trade what you see, not what you think. When you prepare correctly, then you're just diligently reacting. When you're not prepared, you're thinking too much, and that's what tends to get you in trouble. So when you're reacting and you don't know what you're doing, that's dangerous. But when you're reacting diligently, whole nother ball game. So make sure you kind of understand that and get yourself in that right frame of mind. So for tonight, the agenda is putting it all together. First 4 webinars. Real quick, I want to tell you what a real prop firm is, because there's a lot of so-called prop firms out there. They're really not prop groups. And you want to make sure you know what a real one is and how we've recreated one in a sense where I don't back individual traders, but we collaborate and get people who are hardworking guys, smart guys, good people that will talk and relate and create just that. Create relationships. We'll talk about ready, aim, fire. This 3-step process, which is another phrase for putting it all together. All right. And then your next step to come and join us if you want. Now, real prop firm, real quick. That's me. And not too long ago, that's me. 2012, this picture was. And I became a board of trade member, like I said, and a pit trader ready to quit. And I found this guy who worked at a prop firm. He was a risk manager. And he said, come here and I'll show you around, meet some of the guys. And I did. Went and met him. Seeing it was just an electronic firm, bunch of workstations side by side by side. I said, well, what's the deal? He says, well, if you get hired here, there's a profit split. 3-year contract, you get half, the prop firm gets half. Now, what's the difference between a real prop firm and one that might be out there? Well, they didn't necessarily tell you you had to pay to get hired, meaning, hey, we'll back you and give you 80%. No, it was 50-50. They took on the losses. Sometimes there was a desk fee involved, but they took on the losses. And most importantly, they gave you the equipment, the environment, put you around other people, which was important. Now, I went there just to, know what a prop firm was, and many people don't know what a real prop firm was. I was in the business on the floor, didn't know what it was. And so the risk manager says, next week, I'm not the owner, he says, but the owner will be here next week if you want to set up a job interview. I'm like, wow, didn't come here for that, but sure. I go home. I've told this story a million times, but I'll tell it again. I go home, still living at home. I was in my early mid-20s, and I said, Dad, what do you think? Told him about the job, and he said, listen, what time do they – well, I asked the guy. I was there at noon, and I said, where's everybody? There was hardly anybody there. He says, they're done by 10:30. European equities close at 10:30 Central. I said, what time they get here, 1, 2 in the morning? He goes, no, about 6 they start rolling in, 6 or 7. 10:30, 11, they're gone. So I go home, tell my dad I go there next week, and I got an interview. He says, get your rear end there before 10:30 and look at the cars in the parking lot. They're nice cars in the parking lot. They're making money. Take the job. And so the owner was a former pit trader. It was about 1920. I was like the 20th guy that he was going to hire. And he says to me, what makes you think you can make money here? It was the last question he asked. And I said, because I'm putting myself around guys that are doing it. And he says, you got the job. And he also added, it's not just about putting yourself around guys that are doing it. It's about putting yourself around guys who are also trying to do it, whether it's newer guys or guys who might have been struggling for a couple months. And you guys that have been around me have heard me tell this story a lot, but I don't think it gets old, because the way he said it to me was, if you're just around guys making a ton of money, sometimes you get jealous or intimidated. But if you're around guys that are making money and guys that are trying, and along with you, you're ahead of some guys, behind some guys, and you just got the energy to advance. And that combination is really powerful. He says, but right answer. He says, don't have to check his references. He's got the job. And years later, I think I guessed at that answer, but it was the right one. That was April of 2000. This April will be my 20th year in front of a screen. So that's important to understand what a prop firm is. And the reason why I tell you that is because that's where they put it all together, right? The checklist that we've been going through in the previous 4 webinars, you're not only going to learn that, you're going to stay on that. You're going to stay focused on that. You're not going to be allowed to do some things that people are allowed to do when they open up their own trading account. It's like, here's a good analogy, because I've run into people in this respect. My son, who's 15, can't get a speeding ticket. You know why? Because he can't drive. He's not allowed to drive a car. So he's not going to get a speeding ticket. In a prop firm, you're not allowed to add to losers. You're not allowed to trade bigger than you should. You're not allowed to take huge losses. It wouldn't happen. So those mistakes that many people made when they trade on their own wouldn't even happen, because you're not allowed to do it. So it's not a rule that you guys might have when you open up your own trading account. It's a law. You break rules, you pay a fine. You break a law, you go to jail. In a prop firm, you get fired, or you won't be able to trade bigger than you're supposed to. Every time that you wanted to get a bump, we call it, in size, you'd have to go in, risk manager. He'd meet with you. Sometimes a quick meeting, you'd literally sign the bump from 1 to 2 to 15 to 20 to 100, whatever. You'd sign each time they give you a bump, because you were not allowed to trade bigger than that. But they had to give you twice the size in case you got double filled on a resting order. So you could trade bigger than that, but you signed this so you wouldn't, or they had it in writing. The point is, in a real professional environment, they won't allow you to do those things. That's why, and by the way, I'm not telling you to go out and find a prop firm like that, because number one, they're not practical to find. Number two, when you're not physically with people, meaning when there's just a bunch of people that you're learning from, and there's some prop firms that offer education and everything. The problem with that is that these guys are worried about themselves more than they're worried about training other people. So and when you're physically not there, it's almost like you're paying a really hot premium. And when they have you when they have you with real big traders, they don't have time to answer emails. Like, there's only so big that someone who is helping you trade could trade himself, or else he's not going to be any good to you. Right? So you have to find what's practical, and it's not practical to go to New York, Chicago, or London and find a prop firm, get hired at one. Nobody in here is going to do that. And so I'm not saying the next best thing is to come to a community like mine. No, but I'm saying that a community that actually gives you a chance to have relationships, so you're not alone. Being alone eventually is a killer. I'm telling you right now. So you got to find some sort of community. Now let's put it together with this ready, aim, fire concept. And then I'm going to show you what I did with a recording today that, you get in the trading room every day. But ready, as far as the first webinar, what did we talk about? Bird in the sky, boxes and patterns. Bird in the sky is what? Rotation for location. How to properly read and have your eyes fixed on a chart. Boxes, meaning consolidation fights, a breakout, what patterns could come from that. All right? Get you ready when you look at a chart and say, wait a second, this might be setting up. Aim, support resistance, but that baby bird story to tell you why you're coming into support resistance, why that support and resistance might in fact work. And they're good levels because you know why they would work. So get you to sit up in your chair. And again, these are just general examples to walk you through. Fire, for instance, could be punch in the face story. Where orders come in and they're on the sell side, markets can't go down. And you continually see that at that particular price or in that particular area. Selling comes in and it can't go down. Selling comes in and it can't go down. I punch the guy in the face. He doesn't even flinch. Forget about knocking him back or knocking him down. You don't even flinch. The right question when trying to read order flow and put yourself in that sequence. But you're ready at support. You're ready at resistance. You've seen your pattern begin to set up. Correlation, right? Which is another market either doing something quickly to get your ass in the trade or doing something to keep your ass in the trade. Let me use some illustrations here. Bird in the sky, you're following a chart pattern. Boxes or consolidation ranges, patterns allow you to recognize them as a point of reference. Support resistance, when you understand them in reference to a baby bird, it means you know why it's probably good support. There are people that are stuck short trying to buy it if it's support. They're all helpless guys bidding to get out of a short they're stuck with. You don't have to exactly have support resistance based on that, but when support works, it has that dynamic included. And then maybe you come down to it outside of a box and it bounces really quickly back into the box. Is that a head fake? Maybe. Or you're at least ready to fire. And then there's a correlation that gets your ass in the trade or keeps you in the trade. Did you see some selling down in here and the market couldn't breach right away and you took a shot because you knew where your risk was? but you're following the rotations. You're following it coming out of this consolidation fight. It's coming into some support. You've seen some selling that can't get it to go down. And if someone asks me, and people are thinking about this, and it's okay to think about this. It's okay to even ask this. Well, if you see a big selling come in, hit the bid, Anthony, do you bid it below it, above it, or at the price? How about all the above? Sometimes it'll be one, sometimes it'll be the other. The key is to recognize that it's not doing what it normally does. When selling comes in, it should just kind of get hit, and it doesn't. Plus, you're at support. Plus, if you get this jump, you could have a head fake starting to take shape, and you really could accelerate to the upside. And you got all these baby birds that might jump and try to chase it. And I'm going to show you a dial because that's what how I'm reading correlations nowadays. You get the bonds that were pointing over here to shoot over here, which means they went lower. So just think of what I walked everybody through in these last 4, now 5th webinar. Rotation into a fight, comes out of it, maybe finds support, has some selling, can't go down, doesn't follow through, and jumps back into the box. You could be long. You could think of getting long. But right in here is where the idea is to create location, to create timing that strips out the randomness to give you a better shot at the upside. Now, everyone could be bullish for other reasons, which just allows you a little bit more confidence. And this gets you to take more trades that were winners, to test your strategy consistently instead of missing trades that were winners. And then I catch it and I don't know what changed. And then you start second and triple guessing yourself. And I don't care what your time frame is. If it's short, medium, or long term, you have a ready, aim, fire progression. And each one of them is including some pattern that makes sense with a fight that's going on in it. They start to shake people out. We talked about that, guys in the boat. We talk about support and why it would be support. We talk about selling and it can't go down. We talk about, in this case, a head fake and why it might accelerate and the dynamic beyond that. And now, when you're right, it doesn't feel like a guess because you stripped out the randomness. Let me remove some of these drawings. Now, did you take it? If that's what you're looking to do, and this is just one example of many, but they all include these concepts. And the reason why I say, did you take it, is because ready, aim, fire, then you got to clean your gun. How many misses did you have? Yeah, I got a deer today, but you should have had 6. Or someone would say, oh, it's great, he got one. Yeah, but he missed the first 6. He should have been done 6 hours, should have been eaten 6 hours ago. And this is the review. You talk about the ready in the first webinar, the aim in the second webinar, the fire in the third webinar, and reviewing how you did in the fourth webinar. How many misses did you have? And you can find this progression and implement it in any strategy that you have. You're a market profile guy, awesome. Get you bullish, start using a progression like this. You like Elliott Wave, you like Fibonacci, great. But include this as a checklist. Let me draw some other stuff here. Let me illustrate each circle. Hold on, let's clear that. Each circle is a skill set. Each one is a skill set. your ability to follow the rotations of a market, your ability to recognize patterns as they're developing, not afterwards. Afterwards is useless. Your ability to find good support resistance, but also find it in real time as it's developing. If all your support resistance comes from just previous sessions, you're missing what's going on today in today's game. Order flow, which is a big part of reading when price doesn't do what it's supposed to do. Correlation, the understanding that to find value, I have to compare it to something else. To scratch my head, to think something's wrong, I have to ask the right questions. Why didn't it go down? It was supposed to. The bonds are weak and we're not strong. You know what? Bonds don't matter because when I review, they're not really opposite stocks lately. They are now, but in times they're not. When you review, you find that out. When you collaborate, when you have other people around, you find that out. When you have people around you that have their eyes and ears on the right stuff, you miss a hell of a lot less. And that's what a community is about. A good community is about. Not just more eyes and ears, more eyes, and not just more eyes and ears on, hey, we're going into a 3-day balance area. Great. But you also better contribute with this stuff also. It can't just be a profile rich room. And all we talk about is profile. And you got to talk about people being stuck. You got to talk about correlations among the markets you're trading with the ones that relate to it. You got to talk about selling and it can't go down. You got to talk about a pattern that's setting up to see people trapped and you're going to get shorts to puke, which is going to bring in the buying that rallies us through the value area. Careful selling value area low in this profile because, and the ... has this stuff that's supposed to be on your checklist. And oh, by the way, when I went and reviewed it and I did it with some, when we talked about it, we seen something together that we wouldn't have found apart. And like I said yesterday, you don't have to spend hours talking to someone or in front of the screen to review. If you do, you won't do it with any longevity, but you have to do it. You're just going to close down your workstation when you're done. You're not going to last. Does that mean you got to spend hours again? No. If the fruit was extraordinarily low on the tree, maybe you get away with that. If you knew the whole market's position, you wouldn't have to review because you wouldn't miss much. And then guess what? If you did review and you had that kind of edge, you'd be even better. You'd trade bigger. You'd miss less. So cleaning your gun and reviewing how you shot in this progression is important because what you did might not be as good as you thought. Or everybody else, you thought we were going to get 3 deer, you only got 1, but you only had an opportunity to get 1. So you got 1, and it was a great day. I could see someone saying, man, this guy doesn't like animals. It's not me. I like animals. They just don't like me. All right. So when these skill sets, the reason why I draw these circles is that when you're able to take these circles, all right, and find the overlap in them, when you're able to take all these concepts and find the overlap, that is where your success, your edge, your talent, your skill lies. Then you have to have 10 different concepts together and overlapping to make a trade? Absolutely not. I wouldn't want you to. You got to have more than one. You're not going to make money looking at the greatest levels of all time, which could be, I don't know what, value area low if you're a profile trader and say it's right there. And then you lay an offer right on it and you think that price is just going to fill you, go a little against you and the winners are going to go your way. And life's going to be good. Very few times will a trade ever work out that way. And that's one of the weaknesses of a theory like profile, is very few times it's going to work like that. What happens a lot is it comes up to your price and you're sitting on the railroad tracks and it doesn't get you, and that would have been a winner. It worked, but you weren't on the team. Another time it comes in, runs right over you, stops you out off to the races. So you missed the winner, but you caught that loser. You miss some of the winners and catch all the losers. The other thing, you're sitting on the railroad tracks at resistance, you're looking to sell it to get short, and the market fills you, goes your way, goes against you, goes your way, goes against you, goes against you, goes your way, goes against you, and stopped out. Not only did you lose money, but you were on a hell of a roller coaster, throwing up. People are throwing up on you. So you lost money and it was hard. That's what happens if you're just going to lay an offer around resistance or bids around support. That's not going to work. Now, when price comes up to a level that you might want to sell, do you put it at the price you want to sell? Do you hit the bid with a market order? Do you rest an offer at the best limit, at a limit above? All the above would be the answer. Because what you're doing is reading something as it gets into your house. You got to wait till he gets in before you shoot him. But you got to wait till he gets into the area. You got to wait till the price gets into the area before you can engage. And I was talking to someone today, as a matter of fact, about it's too perfect to take one line, which is one price, and think that that is your perfect. If I'm short from the perfect resistance and the perfect price, and it goes through me by a tick or two, I'm wrong. Then you're tick sensitive and you're going to have trouble holding on. Okay. You have to look at a price now as an area. And where are you going to fight for your location in that area? Everyone's area could be at different widths. It doesn't have to be, what is it, a 3-tick area, a 10-tick area? Depends on how much you want out of your winners. It depends on the market you trade. Depends on the volatility in that day or that week. The faster the market moves, the little wider your area has to be. And therein lies where in that area of your resistance, you might get short sometimes near the bottom of it, near the top of it. Why near the top of it, not the bottom? Because you've seen what you were looking for in this progression up here and not down here. So if you just laid your offer below your resistance, you got taken out, it went up, stopped you out, and then it went down. But if you added some probabilities and some skill, you got in at a better location. All these webinars and any good education, I'm going to tell you right now, has to do with always working on and finding better locations. Period. Everybody needs to work on looking for and finding better locations. No matter what your skill level, your experience, or your success or lack thereof. When you're not trading well, you're picking bad spots. When you're trading great, you're making money on being wrong because your locations are stellar. And it goes back to reading the real time. If you're a swing trader, you still got to get in and out in real time. Is it still important to pick good locations for a swing trader, for an investor? Of course. Good locations is important in every style and time frame in this business. Good locations. You want to get long, where you get long, why you get long there is going to dictate sometimes whether or not you're on the team for the run, for the move. When I'm trading poorly, my locations are terrible. And then I'm missing a good location. But then you got to go back and say, well, what did you miss? And then you could find, you know why I'm missing this? It's because I'm either distracted with this or that, or I was mad because the previous trade dictated the next trade. Again, going back to that quote I said at the first 4 webinars, if anger is the emotion that gets you confident, you're in trouble. But you don't know that if you don't review. If you're not cleaning your gun, you're not going to get better and better every time you go out there. You're going to get worse and worse. You got to take care of your tools. And the right tools are making sure you're following the market in simplicity, making sure you're following the right patterns as they're setting up, not after the whole world could recognize them, understanding the best support resistance, have people stuck the other way, knowing order flow questions to ask and why the answers get you to scratch your head, why correlations are important, and how many times did you suck today, this week, this month. And so when you go back over this, the 4 checklists, it covers a lot, pretty much, of what you would need and what you would constantly work on in a prop firm environment. And then people say, well, what about trading psychology, Anthony? Well, guess what? If you do all this stuff, the trading psychology is a lot easier to tackle. It's important, but it ain't the one that's going to get you successful. It could get you more successful, but it's not a skill insofar as, well, I'm a real calm individual and I'm positive and I'm optimistic. People like me. I've got a good frame of mind and I'm happy. Well, I'm a shitty trader. So you got to get all these things locked down and then worry about the psychology. A lot of times you're fearful not because what's in between your ears as far as the what happened in the past, or why am I scared? Why can't I? It's because of it's random. I was answering a question today, and the question was about my pit trading days. Guy wants to have me on a podcast, and he asked, and I said to him, I couldn't raise my arms to trade because I was too fearful. He says, yeah, why? Because you didn't have enough in your account. I said, no, I had plenty. It's because I didn't know what the hell was going to happen next. So fear comes from randomness, and then it snowballs from there. So the best psychiatrist in the world isn't going to get you to be more brave. He's not going to get you courageous, knowing what you're doing well. And then the psychology to get you to settle down and focus, and those things then become a lot more helpful. All right, so let me show you today. I just recorded today's trading room session. Let's clear these drawings. And I'll go to the details of this grandfather for the Edge Pro subscription, which people that have it, I know got a lot of people in the trading room and everything, your prices aren't going up. People who get this within the next day or two, I don't know when they have it for, will stay at this level. And I'll talk about this in a second. Before I talk about this, I want to show you today's session. Not the whole session, because it would be boring. That's why you can't record a whole day and think you're going to watch it. But let me bring this over here and show you. This is familiar to those that are in the trading room every day. And I'm going to play it from, this happened live. You're going to hear Dave and I, we're the ones talking most of the time in the room. You're going to hear us talking. This was today's market. This screen's going to be familiar to people in the room because the layout, essentially. You could see the Zoom is the name of it because that's the screen sharing that we use. One other thing, I got to share computer sound so you guys could hear it. Where is it at? Give me a second. Share computer sound. All right. Before I play this, I want to just set something up for you. This is an S&P 4 rotational chart, bar chart. And we had consolidation box begin to form that I talked about in here. Okay. This is the NASDAQ, by the way. All right. And they had a little bit bigger or wider box. Remember, NASDAQ's a little bit more volatile, so it's going to be a little wider. So that would be their box. All right. And this is just a footprint down in here of the S&Ps. And this is the bond price. I'll get to that in a second. This is gold on a dial. And this is the Dow and the NASDAQ and the Russell and the ES and the delta of the ES. And I didn't pull in all these to make any of these decisions or these calls. It's just when you're looking and used to looking at the right stuff, and don't mind the lady quoting in the background. That's not part of this recording. But the when you're used to looking at the right stuff, again, bird in the sky and all that kind of stuff early on, everything becomes a diligent reaction. You know, how can I watch all this stuff? It's not hard. I'm not the smartest guy in the world. Trust me. I could do it. You guys could do it. It's just a matter of looking at it and slowing it down. Everything slows down once you understand it. I was telling a guy today, and I've told you guys this, when you're listening to someone speaking Spanish and you don't speak Spanish, it sounds like they're talking fast. Well, they're really not. You just don't understand it. All right, so let's get back to this. This is the S&P, and they came in after they opened, and I was actually bearish this morning early until this. There was nothing to qualify me getting short in here, and which was good, or I would have been a loser. But was not short after this moment, okay? So now the market, let's just fast forward into here. Remember what I had said in a previous webinar? Bonds and gold, they're opposite stocks because of Iran and the whole fear and uncertainty. Bonds go up, stocks go down. Bonds go down, stocks go up. Inverted relationship. Let me clear those drawings. All right, let's play it. Just listen along and I'll stop it.
You need to dip below the 96s. The NQ, get down in there and clean out these late longs again.
All right, so I paused it. That's Dave talking. And Dave says 96 is in the NASDAQ. Get below there to clear them out, which means like the story about the boat, right? Too many longs, too many sellers can't go up. Get rid of the longs, then you have an easier path up. You also have the similar pattern happening in the S&Ps. All right, now let's play it. I don't know how much longer this takes, so I have to fast forward. I will. Keep an eye on where the bonds are and where gold is. When they're going right, they're going up. And so that's important. All these are moving too. This is from, I think, a little after 9 Central this morning. There it goes below 96. Let me pause it. So they are clearing out the longs, dip below 96. All right. They're dipping outside a little bit of this consolidation box as well. Other side of the valley. We talked about that in one of the earlier webinars, right? Gets through the center. If it comes back and get through the center, they've got some upside. But let's play it. Watch this bond price and the gold.
Good call. They went down there to clean them out. Look at gold. It went down to 48.55, now 62.
That's this.
By the way, today's, in case you're wondering, the fifth webinar was going to be today at 11 a.m. Because of the volatility, it's going to be tonight at 7 p.m. Central Time.
Hey, that's where we're at now.
Instead of Monday Night Football, it's Monday Night Trading.
That's funny. All right, so a couple of things. Let me pause it. A couple of things now we're looking at. You jump back quicker in the NASDAQ, right? The NASDAQ is giving you a heads up to the S&P is doing the same thing, getting through the center of their consolidation box to take out all these rotational tops, right? And you're also getting, or what I'm also looking at, and I think I say it, are these two guys right in here. I want them to spin to the left.
Dave, they did exactly that. They cleared out the longs through 96, jumped right back through them. And if they can get through these evens, they've got a nice clear path through 02, like they're doing. And a little like head fake down through 26 quarter is like a head fake pattern to finally get through 27, 28.
That guy sounds smart.
9 quarter.
I want you guys to look at these two right here.
9 quarter.
Don't worry
Try
about
to
that.
watch the chop and
9 quarter.
not be the chop.
9 quarter.
I don't want to interrupt myself.
26 evens, an important little spot here in the ES.
You got to down tick a little bit in the bonds. All right. That's this dark blue needle. They went up to even, which was some resistance. They get through even, they'll clear a path. That's me talking now.
26 they could release.
That's me talking this morning.
What did I say? Did I say 26? Yeah.
Yeah, that's what you said.
26 quarter. They could release. They want 26 even.
Oh, now here.
9 quarter.
Watch this bond. Down ticks
9
again.
quarter.
2.
Bid
9
offer.
quarter.
That's a spot right there, 26.
9 quarter.
Is it me or bonds are down ticking, right?
Yeah, a little bit.
See, now I finally noticed that.
They're on consolidation low.
Everything here
9 quarter.
is
evens.
lining up.
It's right in the center of that.
9 quarter.
Everything is lining up. You find your box. You find whether it's potential support to come down into and then release through the top. Same thing in the NASDAQ. So you got correlation. You got an additional correlation with the bonds releasing to the downside. It doesn't matter what your time frame is when you're setting up correlations with some sort of pattern, with additional selling that can't get it to go down. Think about,
I don't want to draw it right now, but those evens in the net.
let me pause this guy. Think about saying all that, knowing all that now than 2 years ago, 3 years ago, or 2 weeks ago before you started to become aware of all of this. How much smarter and more into the market you are.
NASDAQ is right in the center of this box right here in the NQ. Through there, they clear O2s and they take these two tops out. The center of this consolidation box, we're trying to nose through it. And I'm just pretending if I was short, I'd be nervous. Russell, grabbing a nice little BID. Tell Carl that spells bid.
Every recording has a Carl joke, I guess.
Here comes the clarage. Clarage. Is that a word? Through O2.
All right, so I'm going to pause it. The evens, all again, resistance, through it. They cleared them. Why? Because it started to get through the middle of this consolidation. The 26s, you heard me talk about being, important for it to clear to the upside. The downtick in the bonds, the downtick in gold, the upticks in the ancillaries, all are things that pull everything together. I didn't record this 2 weeks ago, 3 weeks ago. I recorded it today. I knew we'd have examples of pulling it all together. This is from today, January 6th. I didn't have to record and say, hey, this is a good moment. I'll use it in the pulling together webinar. I knew I'd get it and get another one tomorrow if I wanted to. Any questions? Anybody think that this is a boring webinar? I'll get to that in a second. The Edge Pro and everything else. Yes, it's $147 a month. It includes more education, but I'm grandfathering people in that are already there and people that are going to get a discount code I'm going to put in the chat box. You're already in, you're set. Another good question, Tim. The reason why question is oil moving opposite because of Iran? Absolutely. Generally, oil moves with stocks because of its influence on the energy sector, which influences the overall market, right? Energy sector is a big sector of the S&P. Oil goes up, energy goes up, stocks go up. But with this geopolitical concern and Iran and all that uncertainty, some retaliation happens, They worry about supply shock and crude. Price goes up. And because of that entire scenario of uncertainty and all of that, stocks go down, bonds go up. Now, this is the footprint, Tim, of the 4 rotational footprint of this bar chart. And this is crude oil in the top right, and the Dow and the NASDAQ and the ES. Now, if you aren't used to looking at a few different things at once, it could be overwhelming, but it's not once you know what to look for. I'm not staring and analyzing every number or every chart. I can reference and pick out these boxes. And that's why in the very first webinar of this entire series and this whole checklist was follow a chart correctly. All right. Any more, just pop them in. Let's go back to the details, what I'm talking about. I changed the pricing, but I also, it used to just be a trading room per month. I now call it an Edge Pro because I've added 3 courses to give people a much better sense of kind of what we went through today, and then some, though, instead of just a room. Because people come to my room, and you guys that have been in it would agree, sometimes you just get a little overwhelmed. Like if you just listen to that video I played, that is the room. And without some of the education that I lay out with this pro subscription, you get the you're less overwhelmed. Now, if you want the grandfather code, I'm going to type it in. I'm not going to put it on this spread or on this slide. I'm going to type it in. What it includes, Jim, is the room every day. What's the benefit? Finding better timing to address the pain point of when do I get in? Why do I get in? Weekly coaching sessions I'm bringing people into. We'll start them up again every Tuesday, content-driven sessions to go over the week, but then also just go over what's been important. I bring in guests from the industry, and that's the benefit, just to review concepts. So there's always a better way to see and do the same thing. Again, 3 detailed courses, order flow boot camp, an order flow kind of progression, correlations. There's psychology, there's sizing plans, there's all kinds of really good stuff that you get. And it's not just the room. And then I put this one in here, so it reminded me to put it in the chat box, the coupon. So 147 looks like 99 forever. I always put an expiration on this, and you know why? Because this business is about making decisions. It's not a sales technique as much as it is a trading technique. You don't have to do this. You don't have to do anything. But no is an answer. With trading, you don't have to get long. You don't have to get short. You got to make decisions. So trading is all about being good at making decisions and comfortable when you miss stuff, as long as you know and review it. So that's it. That's all I got. Let me pop this in so you guys have it that are watching live. No, you're all set, Raj. If you're already a trading room member, you guys are good to go. And I wasn't even going to tag a promo at the end of these 5 events, but a lot of the questions I got through the first 4. So let me just cover it. Hold on. I'll send it to everyone so I don't have to keep typing it in. Put it in with the caps also. If you're already a trading room member, you're now considered an Edge Pro and you're good. You don't have to do anything. Hold on a second. I'll show you guys before we officially end the session. Don't forget to look in the chat box. That's where it is, Tom. There's a few Toms in here. What do I want to show you? Yes, at the end of the week, that's where it goes, 147. Oh, here's the, let me show you the website real quick. When you become an Edge Pro, I had to name it something. I thought that was a good name. The page doesn't look like that. When you click here, you get access to all these courses that are laid out like this. And so not only do you walk through all these videos, but you leave check marks after you watch them. And then you enter the weekly coaching sessions in here. You enter the day session trading room through here. So it makes it nice and easy. Any other questions? Doug, you bet. I'm glad you enjoyed it. Just remember, if you don't remember anything else from these events, remember that any profession has concepts that you now find to overlap, and that's where your skill, that's where your edge or advantages are, where the overlap is. Every 30 days, Jim. Yeah, it's not every first of the month, it's every 30 days. So your anniversary date would be today till the 6th the next month. Actually, you do it today and it's the 7th. It adds a day. The Edge Elite is what you already have, Raj. I just renamed it that. And I don't want to get into that and talk too much about that, because what I do with everyone is I really want people to join the room and learn that sometimes that's all they want and that's all they need. And then if they're interested in meeting other people, putting themselves in an environment to chat and to talk, that's a lot of where that membership comes from. Well, end of the week is, good idea, Ron. The end of this week. They watch it in the future, they're not going to have the coupon code. So it's for the guys that are live. January 10th. January 11th, you'll pay 48 more. And guess what? It's even worth more than that. I only say that from feedback I get from people that are part of this group. And don't forget about this circle, the review circle. One of the mandates I have for this year is to get people better at connecting and getting people they like to work with. Pairing people off. There's nothing better than going, you don't have to go over your stuff daily, but you got to go over your stuff. And when you're doing it with someone you like, you enjoy it. I'm telling you. And it's a major weakness in the industry. The right kind of review, not just review. I'm working. People think they're working really hard and they're not. And that's dangerous. Because they are working hard, but inefficiently. So do yourself a favor and review efficiently and effectively, and try to get yourself paired off with other people and join good groups that analyze stuff in real time, but analyze stuff using these concepts of comparing and contrasting and making sure that reading order flow has the right questions attached to it. Always trying to find where the other people are wrong and where the other people are stuck, and then also the current events. If you don't understand current events, when people say, well, you can't trade news and everything, listen, you don't have to trade it, but you better understand it, because you keep yourself out of trouble. If you don't want to capitalize on news, you're crazy. But if you don't want to, fine, but you have to know how news is affecting the markets you're trading. And no matter what market you're trading, it's being affected by news that's out there. And oftentimes, you don't know what the next driver is going to be. 2 weeks ago, we couldn't have predicted necessarily that we'd be in this conflict with Iran and all the uncertainty that surrounds it. But we now know how to anticipate. I mean, we even had Dave said it just got dark in the Middle East this morning around 9:30 Central Time in the morning. Something simple like that. So maybe if something's going to happen, that's when it's going to happen. Just getting a little closer to being prepared so you minimize surprises. And if you're not being taught that in other education that's out there, it's a big check mark in the disadvantage column, and it's a big missing piece in the education. All these yellow circles here is everything you need to know to give yourself the best chance to do this. You liked it, Dr. Raj? Appreciate you coming. Glad you liked it. And you gave me good advice on my ankle. Jim, I'm rereading your question. No, it's a good question. I thought you were already in the room, Jim. Jim D. All right, guys, good luck. The guys that aren't already in the room, I hope you join. I know a lot of people that have continued to come. I see a lot of familiar names that were here for the first one, second one, and many of them. And that's good. Especially we sprinkled them all different times and days and everything else. Have a good night. We'll see you trading room guys in the morning. The ones that join, we'll see you too. 8 Central. I'll post this on YouTube either tonight or sometime tomorrow morning.